Hi, I'm Tyler with Anderson Realty, and I'm here with Delaney Bravo from HomeLoans.
Hello, I'm so happy that you asked me to stop by.
Absolutely. We're here to talk a little bit about what is happening in the market right now, specifically with lending, and a lot of the changes that we have been seeing. And so we'll take it away, I guess.
Oh gosh. Okay, so I work at HomeLoans. I am a loan officer there, and so I do mortgages. And this whole COVID-19 thing has caused, like you said, a lot of different changes when it comes to guidelines, credit score requirements, all of that. So is there anything specific you want me to kind of start with, or just?
Yeah, actually, I'd love to know a little bit more about, I've worked with a few buyers, and I've been hearing that, they used to be approved at a 620 credit score and now a 580. So I don't know if you can give any insight as to what have changed.
Absolutely, yes. So there are different loan types, and every lender has different requirements. So some lenders have raised what was a 580 minimum score to now a 680. So let's say you were house hunting and you had a 610.
Yep.
If you go under contract, you may not be able to obtain that loan at this time. So as far as credit scores go, because everything's just a little crazy right now, the different types of loans have different credit score requirements than they typically do. I can only speak for our company, HomeLoans, but the credit score that we could do for FHA and VA was 580 plus, which is definitely on the lower end in comparison to a lot of lenders. We have since raised that requirement currently to 640. So you want to ask your lender, if you're a buyer, have there been any changes because of COVID? A lot of people are no longer doing those types of loans at all, or are similar to Jet and have raised the requirement.
Okay. That makes sense. I've heard about 20% of people that used to be approved are now no longer approved at this time. So that's a huge change in the amount of people that, a lot of people are like, well, are we seeing a big change in the amount of buyers or homes that are going under contract? And the answer is yes and no. There are still plenty of activity going on, and the amount of inventory that's on the market we've noticed is down from this time last year. So there are still more buyers than there are sellers. It's still so much a seller's market right now, but there are things to be aware of. So that's good to know.
Well, and with that, working with a lender who's going to do that footwork. So the day that these changes came, I pulled my entire pipeline, and every single buyer who was affected by these guideline changes, there was a call made. If they now were under the requirement, I'm running a credit simulator. Do we need to pay A, B, and C off to get you over that threshold? So you want to make sure that if you think you may be affected by these guidelines, that you're working with a lender who has your back to get those things, rectified.
That's actually a great point that you bring up too about paying off some of your accounts, or trying to boost your credit score towards closing. I've done that before in the past with buyers, not even with COVID and everything going on. But can you elaborate on that a little bit? Because I don't think some buyers actually know that. They think, oh, my credit score is 580, so I don't think I can purchase right now. That doesn't necessarily mean that's the case if they can stimulate their credit score to be at a certain point, correct?
Yes. So I have a buyer I always shout out when I talk about this. She called me and she said, hey, I don't have the credit score that I need, and I'm about to get my tax refund, and so I'm going to pay $4,000 of debt off. And I said, do not pay anything off until you talk to me, because with mortgages, the types of algorithms and things when you pay off is a little bit different. So you want to work with a lender for them to say, pay A, B, and C off, and then you can actually give us proof, and it'll automatically raise the score. But with her, I pulled her credit. She had the credit score, and she didn't need to pay anything off. So we used that $4,000 towards closing.
Great.
But if you have to, it's 100%. I've done it dozens and dozens of times.
Awesome.
Super easy.
So what about any other guideline changes that you're seeing right now?
So there are a couple, and your lender should be an expert in those. If you are over a certain ratio limit, which I'm not going to go into all of that right now, but if you're over a certain ratio limit, then you have to have what is called reserve funds or cushion funds. So we can show the underwriter that after you give your money at closing, you don't have $2 in your bank account. So that isn't something that was a previous requirement, where now if you're on that higher ratio level, they now make us show 3 months worth of the house payment.
Okay, that makes perfect sense. Well, thank you guys so much for tuning in to our little chat here that we had about COVID and how it's affecting the market, and especially in lending. And thank you so much, Delaney with HomeLoans, for joining us today. But subscribe to our YouTube channel, and we'll see you guys next time.